Welcome to this webinar. So the first trade I want to do here is I'm looking for the gap up situation, 43 points. I'm looking for 2 red TTMs here. As soon as I see that happen, then I'm going to come over here and execute a trade in the Dow. Okay. So I'm looking for 2 red TTMs here. As soon as I get that, we will execute that in the Dow Mini. So right now we've got a 49-point gap trade up. On the 50 tick on the 24-hour time frame is blue. Looking for a red in order to go there. Let's go ahead while we're waiting, go ahead and apply this analysis technique to the other market here, which is crude. And I like the delta divergence on that one, so I'm going to put that on there. There we go. Hit OK. And on that one, we're solid. All right, so I've got everything that I need to be looking at. Let me look real quick at corn. Corn's moving a little bit. Last night I put a corn trade on. 2 corn trades got stopped out for 4 ticks or so like that. But looking to trade corn again today if it gets a potential possible limit move going on there. Oh, this is my first course with you. The comment that this is old info concerns me, as I know nothing about your setups. It's just we do the same thing day in, day out. So I mean, all I'm saying is this is a replay from where we were doing the options and tape reading. It's not old information. It's probably just most of the people that are in here did it before. In other words, all right. So here we've got 2 reds. So I'm going to come over here and I'm going to place a sell market order for 4 contracts on the Dow, and now we are short. All right, so I'm short 4. Okay, target is here, stop is here. The platform will pretty much manage everything else for me. I really don't have to worry about anything else. So just to recap on this trade, what I'm looking for first is a gap of it. You know, I really don't want to do it if it's above 60 or 70 points, and then from there I'm just looking for 2 red TTMs on a 50 tick chart on the TTM. Now, I'll do this anywhere from 1 to 3 times. Use a 20-point stop loss, and it'll either work or it won't work. So I'm really not going to sweat it whether it works or if it doesn't work. All I get paid to do is to take the setups when they come and execute them as quickly as I possibly can. So that's kind of what I get paid to do. So this trade looks like it's going to stop me out. If it stops me out, I'm not really going to worry about it too much. I'm not going to get tore up about it. I'm not going to cry or anything like that. Main thing is, did you follow your trade setup? Did you follow your plan? And for me, I did, and we'll see if it's going to pop up and come up here and come and get me, or if it's going to come up here within 1 tick and then roll back over and then come down here and hit the target. I will, as we're going along and trading, like I want to trade the first, say, 15 to 20 minutes here on the morning on the open, and then I'm going to get straight into teaching tape reading and order flow. I think it'll help you out more than anything other than just watching me live trade today. Although that's helpful too. I think if I do a decent job of explaining to you how to interpret price action and tape and order flow, I think it'll help you on every market that you trade. So I'll focus on that just as soon as we get a few market moves out of the way here. Let's take a look at gold really quick here. Gold's down 6, so I need to be short in the gold market. So for the intraday gold trade, which is a gold bug trade, what I want to see is I want to see a +8 up here, okay? So as soon as I see a +8, since we're down more than 3, as soon as I see a +8, then I will short that, okay? Any questions on those first 2 trades that I'm going to do? I've already got the Dow going. The Dow is, I'm down, looks like 10 ticks or so on the Dow. And then I'm waiting on the gold trade to fire off. The other trade I'm looking for is crude, but there's no signal on crude yet. So I'm doing the hurry up and wait game right now. Come on, Dow, stop me out so I can go to the next trade. This is shaping up to act like it wants to be a gap and go situation. In other words, it's gapping up and running. Now, here's the hard thing. Like, another reason why I don't really care if I get stopped out, because I'm swing long the Dow in another account. So the gap up and the go is a good thing. So then you start having conflicting stuff going in your mind going, oh, okay, I don't care if it stops me out of my intraday trade because I'm long from substantially lower. Now, the hard thing is when if this thing decides to roll over and go for half a gap fill, which it will probably do just because it's a high percentage, play. When you do that, then you start going, oh, now I'm giving money back on my swing trade. Should I cut it loose or should I not? So that's one of the reasons why all of us have multiple accounts. We have swing accounts, we have intraday trading accounts, and then we have sub-accounts depending on, different trade setups and stuff like that. And then we also have different accounts in different brokerage firms. So hopefully that'll let you know kind of what we're doing. All right, we still have no trade set up in gold yet. I have got stopped out on my Dow trade. Let me show you that loss really quick. So I had 4 contracts. I was using a 20-point stop loss. So I lost $400, okay? All right, so here's a trick that I do. And it's not so much a trick as it is a tool or a technique. I give myself 2 minutes before I do anything else, okay? So if I made money on the trade, I would wait at least 2 minutes. If I lost money on the trade, I would wait at least 2 minutes. It's just a timeout, right? I get put out. It's just a 2-minute drill to where I get to see if I followed my plan. One thing you'll do if you're really critical on yourself, you can go back here and go, okay, did I follow my plan? All right, at 9:30, this was all blue. And we had this gap up situation here at 9:30. This was all blue, and then at 9:30, still blue, boom. 2 red TTMs, and I never had any opportunity to take a profit. So I really can't beat myself up about that one. All I can do is go, okay, there were my 2 reds. I actually shorted probably more in this area, so it's a little late, but not bad, okay? So when I'm writing down in my journal, I go, okay, took a gap trade. Gap up was 40-some points. Waited for the 50-tick TTM to turn 2 reds. That happened at about 9:31-ish. Got stopped out for 20 points. And then I just record it. And then you can also record, like, how did you feel about it? How did you handle it? Pretty much did it pretty robotic. Didn't really think about it much. As soon as I was in the trade, it immediately went against me. And then just write down some other notes and stuff like that. And then you just go on. Then you go, okay, after I got stopped out, followed the 2-minute drill, and now actively looking for other trades. So what have we got? We've got no crude trade, but we do start to have a potential for paper is buying, locals are selling in the pit. One of the things, and we'll get into that in just a second. Do you pay any attention to whether or not it's an expiration week? I'll trade a little bit less around expiration week, Mary Ellen, but it doesn't factor into my decision-making process. I'll just lighten the load. I'll trade a little bit smaller size, or I'll trade a little bit less. I won't be as active because the moves are more herky-jerky. It's a great question, though. All right. Looks like we're already starting to get into the slop and the chop. The worst possible thing you can do, in my opinion, when you're doing these trades is immediately jump right back in it as soon as you get stopped out. So in other words, if you get stopped out here and you go, okay, long wasn't right, short wasn't right, how about I just go long? And you go long, and now, boom, you take another loss. So give yourself some time period, whatever works for you, whether it's 5 minutes, 10 minutes, 2 minutes, 1 minute, but have a drill, a 2-minute drill after you get out of the trade. It'll help out. It'll help you make a better decision. And then once you're in a trade, make sure that you do not change your analysis and your decision-making process. As soon as you get in a trade, you'll immediately start talking yourself out of ways of getting out of it. All right? So I've never met anybody, and I've never actually got smarter once I'm in a trade. So you almost always get dumber once you're in a trade. because your emotions start, messing with your mind. So just remember, you have a plan. Plan your trades and trade your plan consistently with as few as errors as you possibly can. Now, I'm not going to say that you're never going to jump out of something early, or you're never going to hold on to something a little bit too long. It happens. It's just called trading. It's not called guaranteed income generation with no losses, right? It's called trading. You're going to trade this for that. It's the same reason they call fishing. They don't call it catching, right? Because it's pretty much you're fishing. You may or may not catch something, right? Alrighty, let's see. Not a whole lot going on here, so we may have to be forced into the education part a little quicker than I want it to be. Corn moving a little bit here. Let's see what else is going on in the world. Locals just sold the paper. All right, so let's look at the swing analysis, see if we can find any other markets. All right, Dow looking good. Bonds, rolling over. All right, that's a good little swing there. Crude's not really doing anything. Popping up a little bit. Gold's still down 540, so we could potentially do a short there on that one in just a few seconds. Silver, all right, silver's actually slightly positive. So gold and silver are going in opposite directions. That's interesting. Let's go back to the dashboard here. All right, so we almost have a +8 where we've got it to a high of 656. So let's get our execution ready for that on gold. Where I said here, GMG11. Make sure I've got it set for the intraday. 60 and 6. And this one I like to go 30 and 300. No, hit OK. Now we're solid on that. Yeah, corners close, opens in 50 minutes. Yeah, it's you can still glean a lot of information from a lot of the overnight stuff on corn. You can see last night when it opened up, it had a decent little move here. I actually was long in this area, and it ran up, and I wasn't able to get out of it. Now 4-cent stop, and then again ran up, and then the 4-cent stop on me there. I was playing the 750 area pretty good. All right, back into hurry up and wait mode. Local showing a 4 even bid, so look for potentially the S&P to move a little bit to the high side. I gotta need to do one thing here. Let me move to Econoday. To even bid. So we've got a couple numbers at 10. We've got Philly Fed and leading indicators and existing home sales. So that's what we're all waiting here for. So for another 15 minutes, it's going to be a little choppy, and then we'll have some numbers, so we'll probably get a little action. We'll try to get a trade or two off on that, and then I'll move into education on order flow and tape reading. What would be some of the main questions that you guys have over tape reading and order flow? I'll make sure that they're in queue so that I make sure that I cover those for you. As we are watching paint dry in the market. What is the TTM delta divergence setup? I can cover that, Neil. Basically, the delta divergence. Sorry. I got up at 5 this morning. I'm starting to get sleepy. The delta divergence indicator was a joint venture between Market Delta and Trade the Markets. And here's basically what it's doing. You don't really pay attention to the green or the red. What you're looking for is blue and purple. All right? Glenn, sorry I'm dyslexic. Don't worry about it. Or Gary, sorry I'm dyslexic. Don't worry about it, Gary. I'm dyslexic too. You're in good company. All this indicator does is it will look at a current high. So in other words, let's say that's the current high. Okay? If it made a equal or new high by one tick, and there were more bids or more asks, either more trades that went through the bid or the ask, it would tell you like, okay, there were more aggressive sellers at this high than there were buyers. Okay? Same exact scenario. Let's say that on this situation, let's say that this was a current low and it was making a new low or equal low, and let's say there was some aggressive buying in there, it would go, look, there's more aggressive buying than there is selling. It's a potential bottom, and it would flag you up with a purple or a blue delta divergence. And that's all I'm looking for. It's just basically telling me on a equal high or new high whether there are more aggressive buying or more aggressive selling happening. And when that takes place, as soon as I see the signal, I'll just go with that signal. Hopefully we get one or two today, and I will execute them and show you kind of how they work. They're fun little trades. It works really good on crude. It works good on agriculture futures. Works okay on indexes, and it works pretty good on corn too. What would get you back into a gap trade after waiting 2 minutes? Well, that's a great question. A couple of things. One, I'd like to see really negative order flow. In other words, I'd like to see a lot of selling. Another thing that would potentially get me in is a break of the open. Okay, so if it was a successful break of 12,574, I would like to short that. Okay, on a successful break, and I would target a half a gap fill. Okay, what else would get me short? Potentially a plus 1,000 tick reading. If I got a plus 1,000 tick reading, the first one, I would fade that with the anticipation of it rolling over. So that's what I would use for that. Beginner to the subject, so don't know enough to ask an intelligent question yet. I'm from Mississippi originally and just love to listen to you say hot knife through butter. That's pretty funny. What is it? And at some point, when a lull and an opportunity, would love to hear why you love TradeStation. I'm trying to get an account set up with them. Thanks. We like TradeStation because it's just easy to use, and we've just used it for years and years and years. It's one of the better charting packages out there. Now, from time to time, their execution is not the best in the world, so we don't use it for all of our execution, but we've got some really good relationships with TradeStation, and we've used it for a long time. Another reason we use it is very easy to get custom indicators built for. So for stuff that we do in-house that we want to develop up an indicator, we can call up a programmer, tell them what we want, and they can have it coded for us. So it makes the way that we trade a little bit easier, so we don't have to just stare at screens all the time. What is your target and stop for @CL? On the delta divergence setup, Lee, it's very tight. It's a 10-tick stop and a 30-tick target. But that's very aggressive. If you've never traded crude before, you might want to widen those out a little bit. I would risk, say, 15 to 20 ticks and be looking to make anywhere from 10 to 20 to 40 ticks on that. Usually the delta divergence trade is a quick scalp trade. So we got 10 more minutes, and we'll have 3 economic news releases released upon us, and then we'll see if we can get any more decent trades. So far, I've only done one and lost 20 points on it. You're very welcome, Lee. So while we're sitting here waiting, just waiting for the economic news release, what are some of the things that you want me to cover today? Because we'll be together for a fair amount of time today. What are some of the issues you're having with trading? What are some of your fears or struggles that you're dealing with? And not only will I teach you order flow and tape reading and stuff like that and help you throughout the day, but what are some of the other issues that I can kind of help you with today? Like I said, the schedule for today is you'll be with me from 9:30 till about 11:30 to 12. Then we'll take a lunch break, and then John will be in here. And then I'll be back at 6 p.m. East Coast time. We're all going to trade the gold open together. And then we'll also be in here again tonight, probably either 9:30 or 11:30, because I've been actually going to bed earlier. So we might be in here at 9:30 instead of 11:30. So far, I see no reason to short the Dow. The order flow continues to be sideways to slightly higher. It's very slow, but you can see in the order flow, nice and methodical, 97, 97, 97, holding at 97, 97, mixed 97, 98. 5 trades at 98, implies it wants to go a little higher. It'll probably pull back a little bit, push through 98, and then go higher, higher, higher. There's 99. One tick at 99, half a dozen. It's going to go through 600 now. Now it's pulling back. It topped out at 99. Probably going to come down to 96, 95. Roll through that. That'll be support. Start jumping up at 97. Peck away back at 98, 98, 98, 98, and then roll through 600 pretty easy. Then it'll stall there and pull back again. Gary says, I seem to be getting stopped out very regularly on the overnight gold trade. Is this market changing, or is it just my luck? I use a 6-point stop and a 20-point target. Right now, gold is just trying to figure out what it's trying to do, Gary. So it's in the change mode. So what I would do is, if that's happening to you, just wait. Just wait 2, 3, 4, 5 days until gold either figures it's going to start cruising higher or cruising lower. Then you can turn the good night gold trade back on. Lee asks, how do you put your stop and target in on TradeStation? I saw you used a special box. All right, so for that situation, what you do over here is, first on TradeStation on the matrix, make sure you go right-click and make sure you've got view trade bar, view quote bar, and then there's another box that I think this is the advanced. I don't know if that's the advanced, but you see this button right here where it says attach OSO. So you want to make sure that's checked. Make sure you've got the GTC, good till cancel, right? And then from there, what you're going to do is exit bracket. This is going to be one limit, one stop, okay? So because on gold, we're going to trade one contract, all right? All of today's trades will be anywhere from 1 to 4 contracts. Most of the people that I've surveyed on webinars trade from anywhere from 1 to 5 contracts. So I try to do the lowest common denominator, all right? Then for the entry of the stop and the target, what you're going to do is you're going to hit this little bubble right beside that, and you're going to say, all right, your limit, that your target is going to be 300 ticks. Your stop is going to be 30 ticks. You just manipulate that number, whatever you want it to be. You can make it up or down, and then you just hit OK. And that'll take care of the rest of it for you. Now, if you were trading multiples, you would have 1L, and if you get the two confused, all you have to do is go, okay, my limit is my target. So now you'll have 3 L's and 1 S, all right, if you're going to trade 3. So you'd go 3 L's and 1 S. And then you would configure each one of those for a different percentage, like 33%, 33%, and 33% would give you that situation if you're going to trade 3 lots, 34, 33, 33, and that would roll it out for you. You can see that the limit is plus 10, plus 20, and plus 30. So that's pretty much how you do it. Okay, tape reading order flow. What types of trades do you use it for? How do you get the trade set up? Success criteria, do it again, or failure criteria, quit for the day. For me, I have a general rule of thumb. If I lose money on 3 consecutive trades in that one market, I'm done in that market. Good bids in the pit. Good bids in the pit. Gold and J.P. Morgan both buying. Locals are selling it to them. Papers buying. A couple minutes before the market releases these economic news releases, they're just getting in front of it. All. Hello, finally didn't get an email to sign in. Also, I'm traveling and I'm using Easy Trader on my Droid to get connected. Then turns out webinar is secure website. So I had to upgrade it user today. Yeah, this is all being recorded, so no worries. Hopefully we won't have any technical issues. All right, so I've got a short signal that I have to do in gold here. It's down 3, and it's a positive +8. Okay. There we go. We've got numbers in 4 minutes. And I'm short gold because of why. We were down more than 3, and I had a +8 on the value chart, which is a short signal for me. Anytime gold is down more than 3, I shorted at +8, and then I cover it either -4 or -8. What are your 3 graphs on the right? I can't see the names. This one is the tick. This one is the trend. And this one is the program buying and selling. Paper bid in the pit. Paper bid in the pit. Local sell. Paper bid. Thin bid, though. Thin bid. Thin and small. All I see is silver chart and matrix. You should see a Dow chart, a YM chart up and down, crude, gold, time and sales. Try logging out and back in, Lee. Your screen might be locked up. Does everybody make sure that I'm on the same dashboard that you are? Everybody, can you see where I'm pointing down here? Does it say dashboard? Yes. Okay, everybody else is telling me yes. When would you play a gap and go on the YM? I would have to wait until the economic news gets out of the way. And a gap and go situation, since I'm already swing long, I probably wouldn't do it just because it would get me double net long. But one thing you could use, Gary, is a positive +1,000 tick reading, and then the second tick hook after that. We could do that. You could also, if you feel that you've got a good feel for the overall market direction, which right now is up, when these TTMs go from red back to blue, you could get long there too. All 3 of those things tend to be workable on gap and go situations. Paper bid. So you follow the 50 tick chart for rotations in the YM. Correct, Gary, yes. So here's your first one. You've got blue here, red. Now you got your first blue here. Just get one more blue to close, and you'll have a decent signal on the TTM rotation. What's a paper bid? A paper bid is from an institution, from Goldman, Merrill, ShiCorp, stuff like that, deep pocket traders, institutions, and stuff like that. So here comes the numbers. The Dow's selling off pretty hard. I'm looking for my -4 here in gold. All right, there's my -4 in gold. So I'm going to close that. All right, so we got that one out of the way. Went from +8 to -4. Made a little money there. Decent trade. Okay. Low prints after those numbers. Doesn't look like it's any good. Doesn't look like anybody likes it in any market. Dow selling off, gold selling off, crude selling off. So now we just got to get positioned again. Here's the numbers. So all those numbers are bad. Here's the key thing. Don't really worry about what those numbers are. What you want to do is go, oh, it's selling off. I should probably be short. What's the best way to be that? Then what you're looking for is, now we were going to do a long rotation. Now we're going to do a short rotation in the Dow. Blue, I'm looking for red. As soon as it gets red again, we'll short the Dow. We'll wait for the gold to come back up here and hit +8 on the value chart. When that happens, we'll short that again, as long as it's still down 3, which it probably won't be at that time. So right now we're in a hurry up and wait situation. We're waiting for the next signal in the Dow, and there's blue. We're looking for red. All right, there's one red, and there's 2 reds. I'm now short the Dow once again. And I'm going to have to go flat on this bad boy here. Okay. Let me get this set here. It didn't send my order. There we go. Pit is dead quiet. And there we go. I have no idea why my orders are not being sent. That's kind of weird. There. I'll just resend them. So now we're short again, 4 contracts on a TTM rotation to the downside. Either work or it won't work. We'll just let this thing kind of percolate here a little bit. Paper seller in the market, paper seller. So I'm going to go over the trade that we did. So before the news came out, which I don't really care what the news is, we were thinking about, all right, we look like we were up here, and the TTM rotation that we were going to do is we were getting ready to go red, and then we were going to go long when we had 2 blues. We only had 1 blue, and then we sold off hard again. Now what we're waiting for is we're waiting for blue, since we sold off decent, blue, 2 reds, blue, 2 reds, and then short. All right. Now, if this does not work, I probably won't trade the Dow anymore for the rest of the day. All right. Why? It just means that my stuff today is just not working on the Dow. All right. So what I'll do is just go, oh, it's just not working today on the Dow. Not a big deal. I'll go trade crude. I'll go trade gold. I'll go trade corn. I'll trade something else. I should be stopped out. Why am I not stopped out? All right, here we go. All right. Second stop out on the Dow on 4 contracts. So now for that market, you just shake it off and go, today's stuff on the Dow just doesn't work. So just shake it off and come back to it later. All right. So my focus is now going to be I will watch the Dow, but I won't trade the Dow, okay? Here's a half a gap fill, which will probably work. By all means, feel free to trade the Dow. I just won't be trading it with you for the rest of the day probably, all right? I thought you said to be aware of huge volume and then go in the opposite direction. That works really good for gold. This is actually just a reaction, a news reaction right here. All right, so here goes gold. So we're probably going to be able to get long gold. Watch gold move. Here goes gold. So now we're down 2. So now I got to wait for gold to go up 3. And then when gold goes up 3, I can start going long gold on a gold rush trade and a gold bug trade. So now on this one, I'm just shifting. Okay? So we're almost in positive territory here on gold. Not yet. Can't touch it until we go up 3 points. So in other words, this thing's got to move another 5 points in order for me to play with it on the long side. When that happens, if it does happen, I will buy new highs, and I will also buy pullbacks to -8. All right? The pit's full, but they're not making a lot of trades. There's not a whole lot of action going on in the pit right now. All right, so we've got the first 30 minutes out. Out of 3 trades, I lost money on 2 on the Dow, made money on 1 on the gold. So now what I'm going to go into is I'm going to go into teaching mode on order flow. We may do a few scalps on the Dow for education purposes on order flow and show you how you would do that. So the first thing you want to do is, first you got to decide on what market you're going to trade. For this information, what we're going to do is I'm going to be giving you a mix. Mainly I'm going to focus on the Dow, okay? Because the Dow index is the main index that I trade. There's a couple reasons I trade Dow. One, I get super cheap clearing on it, and I just like the way it wiggles a little bit better than the S&P. Okay? If you don't like the Dow, you can continue to trade the S&P. It's not a big deal. You can still use the exact same information I'm going to share with you. So there's 2 key components of what you want to use when you're trying to learn how to tape read. Number 1, you don't want to use any charts. I know you're probably freaking out when I said that. The key to properly gauging order flow is just using time and sales and pit noise. Okay, bid, got a bid in the market, paper bid, getting ready to go through 86, trading at 85, 86, 86, 86, buying at 2 halves. So first, let's go through and explain to you what you do want to look at and what you don't want to look at. None of the trades that I did this morning had much to do with order flow. They were more trade setups. All right. So the first thing you want is you want to have the Dow chart up, right? And you want to have two different time and sales windows. Now, I don't recommend that you look at this stuff when you go create depth of market for that YM. When you do that, a little window will pop up here in just a second. You don't need this stuff, right? This is useless. It's not. I mean, the bid and the ask. That's not what you need. All right. You also do not need this. All right. And you don't have to pay attention to. All right, let me just do the YM here. So if you look at the YM, and you can see that these are the bids, and these are the asks. All right. This right here, as you'll find out later when we trade gold tonight, is called liar's poker. This is what me and all my buddies that like to make markets mess around with retail traders. We'll flash orders. We'll have iceberg orders. We'll do some weird, funky stuff in the bid ask. And we really don't want field. We're basically trying to represent what we want you to think we want to buy or what we want you to think that we want to sell. So don't pay attention to this stuff, the depth of market on the bid side or the depth of market on the buy side. Think of it like this. You're in an auction, which is all the markets are. It's just a live auction amongst all of us, all right? And there's a computer program that we all just, if the exchange, we are just exchanging orders, all right? If we're at a car auction and somebody is wanting to sell a car for $40,000 and somebody goes, hey, I got a bid, I'll bid $10,000. And then somebody else bids $12,000. And then you start getting up close to that 38 number, that $40,000 number, all right? So then let's say that you go, all right, you're bidding on something, and then somebody flashes a bid at, $39.5. But he really doesn't want it. He'd rather have it a little bit cheaper. So he sees if there's any action at $39.5. And if it goes a little higher, he's like, all right, a little bit higher. So this is what you think people want to buy and sell it at. The price action that it actually goes by is this one right here. It's the time and sales, is what it actually got sold for. All right? So remember, real-time negotiation is all this is. Real-time negotiation, and weird stuff happens on a real-time negotiation. Some people get flustered. Some people panic. Some people get fills when they don't want them. Some people put in too big orders, and then they cancel them. And some people just jerk around the market, okay? So the first thing that you want to do is you want to set up 2 time and sales windows. In TradeStation, it's fairly easy to do. All you have to do is go right-click, and then you're going to go insert, you're going to go create time and sales for @YM. All right? Once you've got that, you've got a window open here, which has got a lot of information, which is information overload. So the Dow's starting to go lower. Lower, 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 looking good. 55s, 54s, 57s. So you'd short it right now at 56, 55. 55, 57. Short it at 55, 57. Now you can start to cover. So as I'm trying to teach you what I'm doing, I'm actually seeing stuff in order flow. All right? So 57 was the flash order to get a fill. You would have shorted it there. You got a fill at probably 55, even if the bid was 57. 57, you throw it out there, you get a fill at either 56 or 55. Now it's dropping, and you're at 51, 49, lower, lower, lower. A little bit of pop-up. See the 50s here? Not a whole lot of interest there. 50s, 52s, 51s. Notice the speed. Very slow speed as it's bouncing up. Now, notice the speed as it goes down. 48, 55, 44, 43. No 43s, only 44s. 47. So now the sell again would be at 48, 47, 49. There's one tick at 49 right there. 47, 48, 49. So now you'd reestablish short here, and now it's going to drop again. Lower, 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 lower. Watch when it drops through 45. It'll start flashing. It'll go whoosh, whoosh. All right? That's what you're looking for. Push, push. 43s, push, whoosh, whoosh. That's what you're looking for. Does that make sense? 42s, 41s. If you want to break it down in its essence, which way are the prices going the fastest? Up or down? Are the prices going faster, up or down? 40s, 39s, 42s. So now the short would be at 42, 43. All right? Short would be at 42, 43. You're probably going to take a little heat on this one, though. All right, and now you see if it's going to push through 39s again. You short at 41, 42, 43, and see if you're going to get a push. The pit just went dead quiet, so that's the reason I know you're going to take heat on it. So if you short that, heat just means it's going to go against you first, okay? Because it's going to drift a little higher before it pushes lower. So when the ebbs and the flow and the feel of the market, when you learn how to use it, it makes trading a lot easier, all right? So let's get back to setting up our time and sales window. So you've got this window. First, we want to make sure that we format the window so that everyone can see it. Let's change the fonts to bold and 18, okay? Everybody should be able to see that. Now, from that, we're going to delete time, type. We're going to just leave price and size because you should know what all the rest of this stuff is, all right? Now, I always get the question is, what are the little white signs? Now, a blue tick is just an uptick. A red tick is a down tick. And anytime you see a white trade, it's a trade between the bid and ask. And you're probably going, how's that possible? If it's a trade between the bid and ask and the Dow's the 1 point spread, well, sometimes the spread will get wider, okay? So what we're going to do is now we're going to go in here, we're going to go right-click, we're going to go Format, Window, and then we're going to get rid of, hold on, no, we're going to go right-click, Format Columns. There we go. And I'm going to remove time. I want to keep, I'm going to remove the type because they're all trades. I'm going to remove the exchange. If you wanted to keep the condition, you could at the bid, at the ask, between the bid and ask. I don't really use it. Then we're going to remove. So now we're stuck with the real-time bid and ask of that actual market that's going through there. All right. One other thing that I like to change is I like to change these little markers. If you want, until you get used to recognize them, they're fairly useful because it'll say 50, there's a down tick, 51, there's an uptick. For me, I can do it just as easy without these weird up and down ticks. So you guys make the judgment call whether you want to keep them or not. I always delete them just because I'll see it 52, 53, and it's easier to see in my mind's eye than on the screen. So I'm going to go in here and I'm going to go Format, Window, and then I'm going to go to Color, and then I'm going to uncheck that the Trends tab, okay? So Color, Trend tab, and uncheck Enable. Now they're gone, okay? So that's how you do it. Now, there's two things that I like to do on anything that I'm reading tape on. One, I like to see all the contracts, and two, I like to see a little bit bigger size on the trades when I'm trading a little bit bigger size in case I get lost in the forest. And this is my map. So what I do is I then go right-click, and then I go Copy Window, right-click, Paste Window, and now I have another time and sales that's already built from my template. All right. Now what I want to do is I want to go, anybody that's trading more than 10 lots, I kind of want to know what they're doing. So I go right-click, Format at YM. Right-click, Format at YM. And then I'm going to go down here to where it goes, Display Trades, Show Trades, greater than or equal to 10 contracts. And now I'm only going to see in this column anybody that throws out a 10 lot or above. So on the left column is single lots. In other words, it's everything. It's one through everything. This is all the price action. As you can see on the Dow, there's a lot of one lots traded, right? And then on the right-hand side, it's only going to show me 10 lots and above. So 9 and below will not be shown in the right-hand screen. Now, since we just built that window, there's not very many 10 lots going through. The windows that I just built are already over here for me on these two columns. All right. So does everybody understand what we're doing? Every market's a little bit different. If you're going to trade the S&P, I would probably do minimum of 50 lots would be the filter, and you might even want to increase that to 100, 200 to 500, okay, just to see different size going through. And what that enables me to do is, and it's not like I'm going to let the bigger people that are going to trade a little bit of size with me affect what I'm doing. I just want to know where some bigger size lots are coming from, okay? All right, so now that we've got that set, and you got to figure out each market is a little bit different. You want to see everything, and then you want to see a filter. All right, that filters out the big stuff. Next thing you got to figure out is what type of trader you are. So when you go through what type of trader you are, these are the questions you need to ask yourself. Are you a trend trader or a counter trend trader? All right. A trend trader is going to go with the overall market direction for that day. A counter trend trader is going to fade every move. Like on this sell-off, he would buy. On this run-up, he would sell. On this sell-off, he would buy. A trend trader this morning would have saw that we had a gap-up situation and wanted to focus on the uptrend until that changes and then focus on the downtrend. Now, I'm probably about 70% a trend trader and about 30% a counter trend trader. You can be a mix of two. When you first start trading tape and order flow, I highly recommend you only focus on one method and don't change until you got that method down. All right. I also would try to focus on the overall trend of the market and not try to go long, short, long, short, long, short, long, short all day long. You end up creating a lot of commissions and churn when you do that. And you end up making no money at the end of the day, but you've created all kinds of commissions. So figure out what the direction is. Try to focus on that direction and try to stay focused in that one direction, okay? You'll make a little bit more money when you first start out. Now, once you get profitable, if you want to start doing a little bit more aggressive stuff, by all means, be my guest. All right, so any questions on the first stuff that we've set up? Next thing we're going to talk about is setting up brackets. Let me see if there's any questions here. Lisa, I have not covered that, but I will cover that. All right, so Lisa's got a question. Let me cover that really quick. Let me see. All right. All right, so here's how you do that, Lisa. All right, so the question is, how do you do program buying and selling? First thing is you want to go to indexarb.com. It's this website right here, indexarb.com. I'll send you all the link. Okay, does everybody see the link? Indexarb.com. What you want to do is you want to come down here to the third box. Don't worry about this first box. Second box, trash, don't worry about it. You want to read our trading guidelines for May the 19th, 2011. From here, you're going to read the premium of greater than negative 0.71 is going to be a program buy. From here, you're going to say program less than minus 3.35 is a program sell. So remember those numbers and write them down. Does everybody have them? All right, so indexarb.com, third box, our trading guidelines for May the 19th, 2011, minus 0.71 and minus 3.35. The top one's a buy, the bottom one's a sell. All right, so now once you've got those numbers, I'm going to move this off the screen here. What you're going to do is you're going to plot that on this screen. And this screen is called cash sign ESINX. Cash sign ESINX. You guys see this stuff when I type it out? Cash sign ESINX. We'll send it to all. Does that show up? I don't know where that goes when I send it. It's kind of weird. You see it? Okay. Does that work too? Shows up in those little boxes? Okay, cool. All right. All right, so once you've got those numbers, what you're going to do is you're going to put two lines on the chart on TradeStation. All right. The first one is going to be a program buy, and it's going to be minus 0.71. There's that one. and second one's going to be minus 3.35. All right. Now, you can put audio alerts on these, and you can also do pop-up alerts, okay? Throw out the first signal of these program buys. It's just opening up, so you got to let it breathe some. And then, obviously, this was the sell-off, right? So you had a program sell there, right? Obviously. The next time you're looking for a program buy and a program sell, it's just a real quick scalp trade. As soon as it fires, you want to be long. As soon as it fires short, you want to be short. It's an easy way to front run or ride the coattails of some program buying. All right. Everybody straight on that? Lisa, does that help you? Did I explain it clear enough? Excuse me. All right. Profit targets. It's a real quick scalp lead. I usually risk anywhere from 10 to 20 points on the trade, and I'm looking to make 10 to 20 points on the trade. It's just usually a real quick scalp. If I do get a runner, I try to hold on to it a little bit longer. But usually I usually use about a 15-point stop on that, and I'm looking to scale out every 10 points. Real quick trade. If you're the type of person that has a problem with making real quick decisions, don't do it because you'll just lose money. It's real quick. It's like signal, yes or no. Signal, yes, no. Signal, yes, no. It's not one where you go, well, I don't know. Let's see if it'll work, and then throw it on. It's one of those where it's short. Do I believe it? Yes. It's short. Do I believe it? No. All right. So the second thing that we want to talk about when we're learning how to read tape is setting up brackets. So now what we're going to do is we're going to do some drills. So in these drills, what we're going to do is we're going to pick out a 10-point bracket in the Dow. Now, why a 10-point bracket? Because if the Dow's not moving within 10 points, the Dow's not moving. All right. It's very important that you know when to start the 10-point bracket. And here's how you know when to start the 10-point bracket. It starts when your butt hits the chair. Okay? So as soon as your butt hits the chair, your 10-point bracket begins. Okay? And then once you stop trading it, you stop the bracket. All right? So first we're going to look at 10-point brackets on the Dow, and then we're going to talk about expanding the trade, the bracket being expanded. When you're doing this, it's important that you pay attention to the ebbs and flows of price action. I'm going to get you by the end of the day where you're not looking at this chart. All right? You're not going to like it. It's not going to feel natural to you. It's going to be very uncomfortable to you. Usually when you're uncomfortable, you're probably learning something new, and it's a good thing. So I would recommend that you embrace being uncomfortable. Almost everything that I do on a daily basis, I'm uncomfortable with. So I recommend that you also become familiar and being very comfortable with being uncomfortable. It just means that you're growing personally, professionally, and in every other aspect. All right? So what we're doing is we're just taking this back to the essence of what trading is about. It's about trading. It's about order flow. It's about a bid and an ask. All right? It's not all about price patterns and indicators and secret tactics and strategies and stuff like that. We just want to know, is the daggone thing going higher or lower, and can we make some money off of it? All right? So there's basically only 3 ways you can really make any money in trading. Okay? You can either, once you find a proven trading strategy, which first, that's kind of hard for everybody to do. You got to try to do that without losing all your cash. Then after you figure out that you can actually trade, or you have a proven strategy, there are only 3 ways to increase that. You can either trade more size, okay? You can trade more frequency, okay? In other words, you can take more profitable trades, or you can increase the average profit per trade, okay? So you can increase the size, okay? In other words, the size of the order, trade more cars, more contracts. You can increase the frequency of your winning trades, all right? Or you can increase the amount of money you make per trade and decrease the amount of money that you lose per trade, all right? So in other words, you're going to increase your average ticket on your trade. All right. There's only 3 ways that you can. That's the only 3 ways that you can really grow a trading account. All right. So let's start our bracket. We're going to start at 63. All right. So let's start at 63. So right now we're at 65. So it went up 2 ticks. 66, 3 ticks. So we're at 36. 36. We're not at 35 because we already put a tick in at 36. I'm going to get some more water. We're at 36. 36. The pit is dead, cold, silent. There's not a lot going on right now. 36. So the only way that this bracket's going to get expanded is if it goes to 62 or 67. So now we're at 26, 26, 26. 26. Is everybody with me on 26? 27, 27. So it's 12.562 by 12.567. 28. So we're at 28. So my eye is physically looking right here from about here to here. I'm actually just looking in these first 5 or 6. 28. So since we've been looking at it, has it went up or down to 28? 29, 29. It's getting ready to go through 29. 29, 27. It first dropped, then it went up, but now it's going up. 20, 20, 20, 2, 2, 2, 2, 2, 2, 2, 2. We have a 10-point bracket. 2, 2, 2. See the 2s? See these 2 2s right here? That's not really a good sign. That's a bad sign. It looks like it's a good sign, but that is a death sentence right there. You see this print of 2 here and 2 there, the only single prints? Now watch this thing drop. See how it drops? See it? So that trading tactic that you just saw in the tape is called a phantom or a fisher, okay? A phantom or a fisher, all right? All they're trying to do is it jumped up there, and somebody they threw an order out there. They got to fill in 2 lots, 1 lot and a 1 lot. Somebody got hosed on that field. And then what did we do as soon as that happened? Now, here's the key. How did I know that was going to happen before it happened? All it is we were in that bracket. That bracket got expanded by a couple ticks. They were the only ones out there. It's like a hanging chad. In other words, it's something that you threw up on a wall and it got stuck there. And now you're going, now what do we do? So write that down in your notes. You now know how to do a phantom or a fisher. All right?